So let's just kind of dive into business structure. I feel like that's kind of a number one key thing that I have a conversation with every single client who comes in. So starting as a sole prop is perfectly fine. Putting those properties into your own name is perfectly fine. It is not going to make a difference if you have an LLC from a tax perspective. That LLC is solely there for legal liability protection. If you are carrying appropriate insurance to cover potential liability, it doesn't make a difference if you have that LLC in place, essentially from a tax perspective. You don't get special deductions or, special considerations for that. Where it could become beneficial when you scale your operations to a space where it makes sense, you could consider an S corp structure, but this is not something that you want to do willy-nilly. You want to make sure that you are understanding the regulatory requirements, consequences of being an S corp, how to actually strategize using that business structure, and doing an entity analysis with your accountant to make sure that you calculate your true tax benefits using that structure. Because doing that just to avoid self-employment tax, it doesn't matter because you're paying those self-employment taxes anyway on your Schedule C. And if you establish an LLC, don't just put your husband or wife on it just because. I see that mistake happen a lot. And when you do that, you establish a partnership that in most states you're required to file a separate tax return. You don't want to create these like extra things. In a lot of cases, DIYing those can kind of land you in a little bit of hot water doing that. Make sure you're relying on your professionals for those things.